there, I hope that you're doing well. During today's lecture, I will be discussing blending time and market maker models. Understand when and where the market moves. Here we are on the daily chart of the door, and what you can see is that the door has expanded beautifully the past 2 months towards the upside. The door was drawn towards these relatively equal highs right here. What I will showcase to you is how time and price aligned throughout this whole expansion leg towards the upside, and how every single week the same game plan for the door was in play, where we looked for open low to take place because we understand that smart money is positioning themselves long in close proximity or below the open price. Therefore, every single week what you saw occur was that the market opened, dropped lower, and then expanded towards the upside. Now, before I put my lipstick on, I want you to just take some time to view this delivery, and I want you to try and break down to yourself why the market did what it did. After you have done so, what I will do is I will explain to you how we can blend both time and price, and how I was able to share with my mentorship students before this whole expansion higher took place that we would likely see this move higher taking place on the door. If the door displays is above this high, I want to see the door utilize this higher support on price. If the door begins to utilize this up-close candle as support on price, to me that means that the higher time frame order flow has shifted. For now, what I will be monitoring going into next week is the following. I will be monitoring whether or not the door is going to find support inside of the range of this sequence of imbalances right here. Meaning I will be looking for a scenario like this to unfold, where we open up, retrace, maybe into the previous month's high, but that's not even required. Retrace into this old CB's price range, utilize that as support on price, and if we then begin to do this movement right here, where we expand towards the upside, find support inside of the previous week's high, then displays towards the upside again. From this moment in time, when we see the door displays above this high right here, and we begin to utilize it as support on price, to me that means that we likely are going to attack buy-side liquidity resting above all of the highs which formed during this leg towards the downside on the door. If this is the case, what that means is that the door is going to have a very bullish fourth quarter. Here you can see I have put my lipstick on the chart. Don't worry if you're shocked by the amount of annotations, I'm going to walk you through it step by step. First of all, before we begin, I want to share with you how time cycles have a great influence on the delivery of price. What we know is that the algorithm which delivers price, IPDA, refers to a previous cycle with respective high and low during a new time cycle. Because we are looking at the daily chart now of the door, and because we are looking at a mega trade, a big price swing, we are paying attention to monthly highs and lows. Therefore, what I've done is I've divided each month ever since April, and I am paying attention to the highs and lows that formed during each month. What I want you to see is that throughout the months of April, May, and June, the door was consolidating, meaning you saw it just go back and forth in this area. The function of this consolidation was to engineer buy-side liquidity above these relatively equal highs right here. The reason why buy-side liquidity is resting above those relatively equal highs is due to the fact that retail-minded traders look at that and they think to themselves that the door has reached a strong resistance area, so to say, and therefore they can go short and place their stop losses above these relatively equal highs. Then throughout the month of July, we saw the door begin expanding towards the downside. Eventually, we saw the market drop even lower throughout the month of August right here. Notice that we created this CB right here. And the market continued the sell program. When the door then, however, came close to a higher time frame key level in this area, we were anticipating that the door would likely begin turning around soon. The reason why was due to the fact that we saw first of all the August low form right here. The market then retraced. In what did it retrace? It retraced into this CB right here on the left side of the curve. When the door then had one more push towards the downside, trading below the August low, we were waiting for a smart money reversal to take place. We were waiting for IPDA to show its hand to us. Then, near the end of the month of September, we saw the market begin the buy program, and that buy program continued all the way from October till the end of November, as you can see. Now, the reason why I want to discuss this delivery with you is because this is a perfect market maker model. Meaning, this is a perfect market maker model when it comes to the alignment of the left side of the curve, the right side of the curve, but also when it comes to time. Let me explain. As you can see, I have annotated the August low right here by this red line. Notice that during the month of September, we drop below that August low and the market begins to just go back and forth around that price level. Eventually, when the time was right, the market began expanding towards the upside. The moment that this expansion higher begins, it's the first sign that this was a potential purge and revert now taking place. What we can then anticipate is that we're likely going to see IPDA revert back to previous cycle its respective highs. In this case, previous month's high. So from this moment in time, your eye must be drawn towards, okay, where are the previous month's high? September high, August high, July high, June high, etc. The month of October begins. During the month of October, what do we refer to? We refer to the September high and low. Because October repriced above the September high, which was this high right here, right away, I was monitoring the reaction to this high right here. The reason why was due to the fact that this was the previous month's high, but also because this high set up the repricing lower into the August low. Let me repeat that. This high set up the repricing lower into the key sell side liquidity objective right here, which caused the reversal to take place. Therefore, you know that the moment that this high gets displaced through, that right there is a key signature. But let us zoom even deeper into this delivery. This high formed inside of a CB. And as you know, when a high forms inside of a CB and it also sets up the final run towards the downside, the moment that we trade above that high, you don't want to see a rejection taking place. You want to see the market find support there before expanding higher. What do you see? You see the market reprice above that green line, and we see the next candle then open at exactly that price level, at that high, over sell side into that candle before expanding higher quickly. This right here is a key algorithmic signature because the reason why the dollar did not retrace into all of these gaps right here was due to the fact that this price range was already a balanced price range. Meaning, we already offered sell side and buy side an equal amount of times, and because the market is in a rush to expand higher, we can anticipate that these gaps are allowed to be left open. How do you know that the market is in a rush to expand towards a certain draw on liquidity? When gaps are allowed to stay open and when inefficiencies just barely get traded into. Let me show you. What you can see is that a BC forms right here after the market traded away from this balanced price range. Notice that the market retraced into this BC and we saw IOFED institutional order flow entry drill taking place. This is where institutions are buying rapidly, they're buying quickly, and the fact that we reprice higher right away without trading deeper into this inefficiency is that signature which we're looking for. When we can position ourselves long the moment that IOFED is taking place, we can anticipate that the market is going to run, and those are the cleanest entries. The reason why we saw IOFED taking place right here was due to the fact that on the left side of the curve, we saw a CB form right here. And notice that this CB got displaced through by this BC. The moment that price retraces into that BC and into that CB, we can anticipate that we're likely going to see a quick move soon. Why? Because this is again a balanced price range which is being set up. Remember how this was a balanced price range, but the price delivery here is also now balanced the moment that we retrace and expand away from it. If you do not understand that, I highly suggest you to watch my lecture on the topic of balanced price ranges. We can see that the dollar expands towards the upside and eventually it trades into that CB which I referred to, which was the first CB of the month of August. We see the market reject that initially and a BC forms right here. Notice that we retrace into that BC and we then see an expansion higher taking place. We reach the August high, this buy side liquidity pool, and the market begins to consolidate inside of that upclose candle. Notice that the wicks went above the high, but notice that the bodies keep on closing inside of it. Why is this occurring? Because the markets are waiting for the news which was about to be released. What news? The US elections were about to take place. Therefore, in advance of the US elections, you saw that the door was just being held inside of a tight range throughout the end of October, so that when November could open, we saw an open low into this daily BC right here, into this old CB, and we then saw an expansion taking place the moment that the results of the US elections became known. Notice that when this occurred, the market repriced above the August high, this green line, and we then utilized that same price level as support on price before expanding towards the upside. Now, what I want you to understand is that every single week that I've shown to you inside of this delivery, there was one signature which repeated itself. The door retraced into a key level, and from that key level, buying opportunities presented themselves. So what do you think is taking place on the lower time frames? On the lower time frames, you would see lower time frame market maker buy models. Why? Because we're in a bigger market maker buy model right here. And that is why I'm discussing this today with you. You need to understand the bigger fractals in order to know how the lower time frame fractals are likely going to deliver. We see the market expand higher after having utilized that August higher support and price throughout the month of November, and the market draws towards all buys at liquidity pool objectives. This move right here completes the market maker buy model, and the moment that the market maker buy model gets completed, our eye is drawn to how the market is going to react to those buys at liquidity objectives which we had. Notice that when we repriced above that original consolidation of these relatively equal highs, the market retraced into the buy side liquidity objective in advance of that, an old monthly high, and we then had one more push higher because the market was drawn towards the 2023 high, which was around this price level. Now we can see that the door is, however, trading below this old high right here, and we can see that's trading below this down close candle. Do you see that this down close candle formed inside of this BC? I will be monitoring the reaction to this down close candle moving forward. I'm not calling a top on the door, however, the month of December is upon us, and therefore, if we would begin to see the signs of a sell program taking place, we can anticipate that some sell side delivery might be next, due to the fact that the door has been so bullish throughout the past 2 months. What we are monitoring is the reaction to this level right here. The reason why we're monitoring the reaction to this level, and specifically the imbalance below it right here, is due to the fact that this range is the November range, from range low to range high. And therefore, throughout the month of December, we will be monitoring how the door is going to react to that range. This is the current dealing range of the door, and we will be monitoring how we're going to trade inside of that. We have seen on Euro now. Euro has displaced below this down close candle, and therefore for me, we need to see this down close candle function as resistance on price in order for it to be confirmed that the underlying order flow has changed on the higher time frames. Meaning, what I will be looking for is the following. I want to see Euro retrace into the down close candle with respective price range, find resistance there, and then I want to see the confirmations of a lower time frame market maker sell model taking place to reprice towards the downside. This is the scenario I will be looking for. Preferably, I would like to see Euro leave this CB right here, which I'm annotating now, unfilled. Meaning I would like to see Euro not trade into that price range. I would like to see this CB function as a breakaway gap. Why? Because now here we're on the daily chart of the Euro. And what you can see is that the Euro has seen a massive sell program taking place the past 2 months. This was a beautiful low resistance liquidity run towards the downside. This of course got paired with the dollar being repriced higher significantly. Now before I break down to you how this Euro move was anticipated and how I called this live all the way in this area up here, I want you to pause the lecture again and I want you to break down to yourself what you see inside of this chart. After that, I will showcase to you how time and price can be blended to see these algorithmic signatures. I hope that you're pausing the lecture. I know that it's very easy to not pause these lectures because you can just continue watching them. No one's watching over your shoulder. No one's holding you accountable, so to say. But trust me, before you listen to my explanation, it is so beneficial that you try and explain to yourself first why you thought that this occurred, so that you can then compare that to the explanation which I will provide to you. Don't hurt your own learning process, guys. Don't be lazy. Here I've put on my lipstick on the chart, and what I want you to see is that throughout the month of April, the market initially ran up higher, and we then saw this sudden drop towards the downside. We saw euro slowly grind towards the upside here, and this was a very slow grind higher. Therefore, you can see that a clear trend line can be drawn below these lows right here, suggesting that higher prices should be next. We see the market reprice higher, but it's just very slow. There's a lot of back and forth going. Throughout the month of June, we see the market drop lower, and near the end of June, we again see consolidation taking place. Throughout the months of July and August, we then see euro be repriced towards the upside, and we begin to see it be in a rush to run higher. Then near the end of August, the market forms this high, and we begin to see the market drop lower. September opens up, so what do we refer to? We refer back to the August high and the August low. What I want you to see is that we reprice above the August high here, but notice that the bodies do not close above it. Instead, we see the market take out that high and then reject it. That right there was the first sign that we would potentially begin to see euro roll over soon. The fact that it was slowing down right here was a key signature to me. When we then saw the month of October open up and not retrace higher, but straight away drop towards the downside, to me that was the confirmation that we would likely begin to see a sell program soon. We saw this CB get created right here, and I will walk you through what this CB is in a bit. And we saw the market begin to trade below the September low. Notice that the September low was right here, and that this low was the low of a bearish breaker, where we saw a high, low, higher high, lower low. Guys, real breakers are based upon time cycles, their respective highs and lows. And that's a gem for you in here. We see the market displays through that with a CB. Market retraces into that CB and immediately expands away from it. This is again institutional order flow entry drill which is taking place. The fact that euro did not retrace into this red line, into that previous month's low, but stopped right in advance of it before expanding lower, showed how bearish euro was, and it showed how strong the door was. We then saw the market take out the sell-side liquidity resting below the August low right here, and a retracement took place. Why was the market retracing? Because the US elections were near, and they were utilizing the news in advance of the US elections to manipulate higher, to trap people into believing that the low was in on euro, to engineer more sell-side liquidity below these relatively weak lows, and we then saw the market eventually distribute towards the downside. Accumulation, manipulation, distribution. We then saw the market expand below the August low, and we saw it be in a rush to draw towards these relatively equal lows and to draw towards the sell-side liquidity resting below that April low. Now, what I want you to see is that this was a market maker sell model, where you saw an original consolidation down here, but also here, buy side of the curve, sell side of the curve. Buy side of the curve ends the moment that we reach a key level, and when the time was right, the market begins spooling towards the downside. Notice that when we repriced below the drawing liquidity of the April low, the market retraced into that April low right here, and we then had one more push towards the downside towards the 2023 low. This right here is the continuation algorithm control, where you can see that we utilize a previous cycle low as resistance as price. So in this case, a previous month's low. Notice that this low formed months ago, but it's still holding a significant impact on the delivery of price. The reason why is because it formed at a key level. Here you can see I've added some more annotations to the chart. And what you can see is that I've annotated imbalances. First of all, you can see that I've annotated this BC right here. This was the first BC which formed throughout the month of August. And you can see that I've annotated this CB. This CB formed near the end of September and the beginning of the month of October. This CB was a breakaway gap. The fact that we did not see October retrace into that CB before expanding towards the downside showcased that there was an urgency for euro to be repriced towards the downside. When we then saw euro also displace below that September low and not retrace into it, but instead we saw IOFED taking place, that was again a sign of urgency for this market to expand towards the downside. The reason why I'm mentioning this is because when you understand the higher time frame institutional order flow and you determine that there's a higher time frame sell program in play, what do you think we can look for every single trading day? We can look for open high and we can anticipate market maker sell models to present themselves. Do you understand how I'm showcasing to you how based on a higher time frame you can anticipate all of the lower time frame teachings that I'm showcasing to you every single month and every single week? Within the bigger fractals, the smaller fractals present themselves. When you're able to understand that, you're able to look at a higher time frame and you're able to already tell that in every single expansion towards the downside, followed by a retracement higher, followed by an expansion lower, there will be a lower time frame market maker sell model. Now, what I want you to understand, guys, is that everything that I've taught publicly on my YouTube channel has been released in a certain order. Meaning, I have released my lectures in the way I would have wanted to learn these concepts. When I first got to understand these concepts, my learning curve was all over the place. Meaning, there were so many different concepts and I had to literally filter out what was important and what not. On my channel and within my mentorship, I'm only teaching what matters. Meaning I'm only teaching the concepts which actually make me able to do what I'm showcasing to you every single week. And that right there is how I'm able to transfer my knowledge as best as possible to you. It has been an absolute honor to share my analysis with you on both my YouTube as within my mentorship. Within my mentorship, I call a price before it happens. And within my YouTube channel, I explain afterwards why the delivery took place like it did. Next to that, there are also things which I'm of course not going to discuss in public. There's certain information which is simply not meant for the public. And that is something which I hope you respect. I've already given you plenty of stuff to look at, plenty of insights which you can investigate on your own. And I truly hope that you go out there and investigate, because honestly, it's an absolute blessing to see these markets with such clarity and to have no ambiguity behind why the market is doing what it's doing. So with that being said, this lecture comes to an end. I hope that you found it insightful. I hope that you were able to learn something from it. If you did, please let me know in the comments. And I want to say goodbye and I look forward to speaking with you in the next one. Be safe.